Hey everyone, with Rivian announcing its new R2 platform with models ranging around $45,000 and Lucid announcing the Gravity SUV starting at $80,000, which one of these two EV companies with newer models coming is the better stock to buy today? So that's the question I'll answer in this video, comparing these two EV companies on revenue, on operating income, on cash flow, on how much they're diluting shareholders, how much cash they have left, and their valuation, and then answer which one is the better buy today.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So starting with revenue, we'll see that Rivian has done a much better job in growing the business than Lucid. In fact, Lucid went a little bit backward following the peak around July of 2023. It's been relatively flat, 618 million in revenue for Lucid in the trailing 12 months. Meanwhile, Rivian has exploded all the way up to 4.977 billion in revenue in the trailing 12 months. However, over the next 12 months, it's likely that Lucid will have better revenue growth than Rivian. That's because Rivian has said it's going to produce about 57,000 vehicles this year, the same as last year, and Rivian is selling at lower prices this year compared to last year following price cuts. Lucid, meanwhile, is scheduled to produce 9,000 vehicles this year compared to 8,500 last year. Lucid also announced price cuts, but Lucid also has the newer model coming out around December this year, I'm estimating. They said it's going to be in late 2024. So that model coming out in December should boost sales for Lucid January, February, March of next year. So over the next 12 months, I like Lucid prospects better than Rivian's prospects in terms of revenue growth. Longer term, I would say I like Rivian's prospects better than Lucid's prospects because Lucid is coming out with the lower priced mid-size sedan in late 2026, while Rivian is coming out with its lower priced R2 platform in early 2026, and Lucid has gained better traction. Rivian has gained better traction so far. I mentioned they are going to produce and likely sell around 55 to 60,000 units this year, whereas Lucid is going to be at less than 10,000 most likely. So Rivian has ramped up more, has more traction, and I suspect that its prospects longer term are going to be better than Lucid, which is more of a premium brand for now. Well, they're both a premium brand, but Rivian has that platform to become a lower priced model quicker than Lucid will. And Lucid's coming out with a lower priced sedan in 2026, not a lower priced SUV. And we all know that SUVs are more highly in demand than sedans. So it's close, but given that Rivian has already achieved large scale, I like its prospects longer term in terms of revenue growth. Now, looking at operating profitability, Lucid and Rivian are just going in the wrong direction here. They're losing more and more money as they generate more revenue. Now, Rivian has actually turned things around ever so slightly. You can see that it at least, it was going in the wrong direction fast here. You can see heading towards 8 billion in trailing 12-month losses, but it at least stopped the bleeding and is now getting better. 5.79 billion in trailing 12-month losses. Rivian also reiterated that it will be gross profit margin positive by the fourth quarter of this year. That will be great news, and that will improve operating income as well, but still a long way to go before they are at least breaking even. Lucid also negative 3 billion, and they're not making as much progress in moving in the right direction here. And then instead of like Rivian saying that their gross margin is going to improve towards the end of this year, Lucid told investors that their profit margins are going to get worse this year. That's because they're investing in that newer model, the Gravity SUV, that's coming out this year. So they're spending more on research and development. They're going to be spending more on advertising and marketing for that new car that's coming out. So their profitability is not going to improve this year. Their profitability is more likely to improve maybe next year, towards the back half of next year, when they really ramp up that SUV, which I suspect is going to double their sales, perhaps even more. Given that what I talked about earlier, SUVs are more highly demanded than sedans. So I would suspect the profitability profile better for Rivian than Lucid, at least over the next 3 years. I think Rivian has better profit prospects than Lucid. Cash flow from operations is a similar story. They're both losing billions of dollars on the bottom line and in cash flow from operations. Negative 4.6 billion for Rivian, negative 2.2 billion for Lucid. Now, looking at these numbers, it's important to compare it with revenue. And you'll notice that Rivian's revenue is at 5 billion while Lucid is at just 600 million. So Lucid is losing 5 times as much of its revenue in operating income, whereas Rivian is a little bit more than 1 time its revenue. And then in cash flow from operations, Lucid is losing 3 to 4 times its revenue in cash flow, while Rivian is just about even with its how much revenue versus how much cash flow it's losing in operations. So uh, proportionally, Lucid's losses are much worse than Rivian's losses, and they're both bad. They're both bad, and it's been no secret. I've not liked EV stocks for several years. I've advised investors to stay away from these EV stocks, and you would have saved a lot of money if you avoided EV stocks over these last 3 years. And I've, kind of demonstrated why that's the case. They are losing billions of dollars on the bottom line, multiples of how much revenue they're generating, they're losing. Maybe at some distant point in the future, this will change, but these losses will persist for at least a few more years. And then when all these losses are finished, when they finally reach a scale, if they finally reach a scale, car companies are not that profitable to begin with. They're highly capital intensive, as you're seeing. You've got to invest billions of dollars to develop and manufacture these new models. The industry is very cyclical. When the economy enters a recession, who wants to buy a luxury car for 40, 50, 60, $100,000 when you're losing your job or when you're at risk of losing your job? And then it's highly competitive. You've got dozens and dozens of car companies all competing for market share, and they're all willing to cut prices by thousands of dollars to take market share. And it's been that way for decades. I don't suspect that will change. And so it's not an industry I would want to be in. And especially if you're investing in a company that's generating these levels of losses. The next thing I wanted to look at is cash, right? If you're losing billions of dollars every quarter, every year, I want to see how much cash you have to determine how much longer you have to survive before you need to go back to investors and ask for more money. And Rivian has 8 billion or 7.85 billion in cash and short-term equivalents. Lucid has 3.99 billion, so just 4 billion in cash and short-term investments. Now, if you look at how much cash they went through in the trailing 12 months, 2.2 billion and 4.6 billion, they each have less than 2 years of time remaining before they run out of this cash and they need to go back to investors and ask for more money. I think they'll go back to investors sooner rather than later and shore up their balance sheet before they approach these desperate situations. They'll go and get more money before they get desperate, because it's easier to get money when you've already got money. Whereas if you wait until you're almost running out of money, your lenders and your investors are going to drive sharper bargains and it's going to be harder to raise capital. So I think they'll go to investors again and ask for more money. It's astounding to see how much money these two companies have already went through to get to where they are, to just being, less than, 100,000 units sold annually, it's astounding. It's staggering, to be sure. All right, finally, I wanted to compare these two on valuation. Rivian is trading at a forward price to sales of 1.475, while Lucid is trading at a forward price to sales of 3.481. Rivian is trading at less than half the valuation of Lucid. Lucid has the better technology. Longer term, their EVs are more efficient and their technology is more impressive. You can see evidence of that because Aston Martin paid hundreds of millions of dollars to license and purchase Lucid's technology. So Lucid with the better technology, and they're still at roughly 9,000 units of scale, whereas Rivian is larger scale. You can argue Lucid has better growth prospects, and I did argue that Lucid has better growth prospects over the next 12 months with the Gravity SUV coming out this year, and Rivian's new models are not going to come out until 2026. So even though that I think Lucid has better growth prospects, I don't think it deserves a more than 2 times the premium. So if I was to pick one of these two EV stocks today, I would pick Rivian. Now, I'll remind you that I wouldn't want to own either of these two EV stocks, but if you forced me and you said you have to pick one, I would pick Rivian as the better EV stock. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.